We just got Amazon earnings, and they were very strong. I would go as far to say as almost NVIDIA-esque type earnings, and I'll get into that. Obviously not as strong as NVIDIA, but very strong. However, yesterday I outlined some facts around the consumer that make me a little concerned with the consumer. And those concerns are still there, and those facts haven't changed. So how does that contrast with Amazon and what they just reported? And more importantly, what they guided to in Q3, we will get into very shortly. However, let's break this down. Let's get into things, and let's start talking about these stocks. So Amazon earnings, what's so NVIDIA-esque about it? Well, they're growing revenue again. This is big and important. 11% revenue growth, pretty good. Cloud margins are down. Cloud growth rather is down. That's their high margin business. The product side of the business is not as high margin, is not as important for the overall business, although obviously it's very important for Amazon. But that is showing consumer resilience. So we're going to contrast that. The big thing with Amazon here, and what is actually compelling me to at least put it in a prime position on my radar, I don't know if I'm going to buy it here. It's not incredibly cheap here, but it is a very compelling business, is the fact that they are prioritizing profits, it seems. Amazon has been a tough stock to own. Yes, they've had high revenues, but they've done such aggressive investments into the business, but they've never really showed much of a profit. We've all been able to see through that. We've all been able to understand this business well enough. But now it seems that they're trying to begin to prioritize profits. That is the beginning of possibly, not the beginning of the end, as some may have you believe, but the beginning of possibly doing things like dividends and buybacks, which are very important for shareholders. They are very important for shareholders. I understand the fears that this is, something that could possibly mean that, the growth is done. That is not true. Tesla is also looking at possibly one day doing share buybacks. They don't want to do dividends. Share buybacks are also very good. They cause the stock value to increase. They cause your ownership in the company and the business to increase. Amazon, very compelling after today, showing good business flow. We'll call it good business flow. There's going to be some commentary. There's going to be a lot of important stuff. I'm going to definitely listen to this call today and make a decision about will I begin to make a position in the stock. Of all the mega caps, this is probably the only one I would buy today and here. I'm just going to have to accept that it's not cheap if I decide to do that, but I'm quite compelled to buy this stock. Now, on the surface of things, why am I not willing to back away from the consumer? Why am I not willing to back away from the consumer? Because I've listened to the Amazon CEO talk recently, and he is not talking about the strength of the consumer. That's not what he's talking about. He's actually specifically talking about, I believe the exact quote was, consumers are trading down whenever they can. So that is not strength. But why is Amazon putting up such good numbers? It's not entirely because the consumer is so robust. It's one, AWS is still continuing to grow 11%. Or something, 12%, I think. Overall revenue is 11%. 12% AWS growth, better than expected. They make a lot of money from that. It's high margin. It's going to help the business. There you go. But they own something like 1% of the total retail landscape. So they are still widening out their share of the market. That's a good sign. They are growing. And they have a lot of room to continue to grow. So this is a stock that I think you can pay a higher above market multiple, even though it is big. I don't know if that's going to be the case with Apple. I think Apple later today is going to report an revenue decline, possibly an earnings decline, and possibly not expected growth in forward earnings. And the market is kind of expecting that right now we're experiencing the low in earnings, and things are going to reaccelerate. I'm not so optimistic on that. Like I said yesterday, I don't think we have the 2021 consumer. I don't think we have the 2022 consumer. And I would almost venture as far to say that that is objective. Why do I say that? I say that because savings rates are down and the actual amount of money in the bank is on a very clear trend down. The savings rate is below pre-pandemic levels. Inflation, I think, is possibly going to have a re-acceleration. I don't know if it's going to reach the former peak of 9.1% on CPI, but I do think inflation is going to come back. I think inflation has had a major impact on the savings rate. I think it's had a major impact on the fall in savings balances. And Bank of America's CEO, he's very optimistic. He's been very optimistic the whole time. Not like JP Morgan and Chase. Bank of America is some financial models have had them having too much exposure. I'll leave that to you to decide, but I'm just trying to reinforce that this is a very optimistic bank. They are saying consumer spending is slowing in July. I believe they said the same thing in June. So it's not like we're growing here. That's my concern. The market is pricing and expecting growth. I think the fight against inflation has a long way to go. I don't think it's over. I don't think the full effects of the tightening have been yet felt. I don't think the debt situation is, Goldilocks, ready to enter expansion, and that is a crucial component of having the economy that we used to have. Right now, there's still that, lag effect from that environment, but I think as time continues to go on, it's going to get a little tighter. People are going to tighten the belts. One person's income is another person's spending. It's going to reinforce on itself a little bit. That's just what I think. We'll see what happens. Despite thinking that, maybe I'll be patient on it, buying Amazon. Maybe I won't buy today, like I said. But it is somewhat compelling here. That's the truth. And it's an interesting stock. So kudos to them. I'm doing this video before the Apple earnings get released or the Apple earnings call. I'll be also listening to the Apple earnings call. And very interesting day. That's today's video, providing a little bit of both the bullish side and stocks we can buy with some concerns that still remain. And like we need to know, Warren Buffett says a lumpy 15% return is better than a smooth 12% return. Energy is a very lumpy space. But a lot of these companies are reporting last quarter's earnings. Last quarter essentially represents the bottom of a cycle. They are reporting very good numbers relative to PEs for bottom of cycle. PBF, stock I've written about, stock I like, stock that has bought back a lot of stock. Their bottom cycle earnings are 5 times earnings. That is very cheap, particularly when you consider the fundamentals around that stock. We're basically maxed out on refinery utilization. We're not building any more U.S. refineries, and consumption is continuing to rise. That's why the Saudis are investing in refinery production in Pakistan, so there's somebody to refine their crude products so they can actually sell the crude products. That's the nature of the situation. We are keeping it simple with that. That's today's video, and until next time, peace out.